is this? What is this? Where's all the money?
That's as good as money, sir. Those are IOUs.
The end game is taking shape. We are starting to get answers to more esoteric endgame questions like, how is it that the paper markets and the physical markets will break apart? How is that going to mechanistically happen? And what is going to happen to everyone who owns paper gold and silver versus physical gold and silver? Well, we got the first answer to that question today in news from Bloomberg regarding the electricity markets and what could happen if governments get their way, if the EU gets its way and starts fiddling with the electricity markets like they want to. The answer is the paper and physical electricity markets will rip asunder, and I will show you exactly why and how. Hey guys, Rafi here from the Endgame Investor. Today we're going to talk about governments that want to break the laws of gravity. Thank you to all the subscribers who have signed up for a 2-week trial of the Endgame Investor, and especially to all those who sign up for my Patreon, where you get a weekly video of biblical commentary on economic and monetary policy topics, $3 a month from each patron or more if you want to donate more, and that's great, and I love it. And I'm really enjoying the questions and the comments from the very wise patrons that we have building up over there. So see the links in the bottom of the description for Patreon and for the Endgame Investor. And don't forget to subscribe and like this video because it does something with an algorithm or whatever.
Some idiot must have put metal in the microwave. Yeah. And the microwave radiation, combined with the gravitons and graviolis from the supernova, blasted us through time itself.
You see, when you have a law, like the law of supply and demand that sets prices at the equilibrium point between supply and demand, when you have that kind of economic law or any law of nature, governments always want to try to break it. For example, they'll say, if they're falling from a financial cliff or they're falling from an actual cliff, they may say, hey, I don't like that I'm falling. I'm going to pass a law that says that gravity no longer works. Well, gravity doesn't really give a crap about the laws that their legislatures pass regarding gravity. Neither does economics care about the laws that they pass regarding economics.
He's gonna be
Well, now, instead of stopping gravity, the European Union wants to control electricity prices, which will do nothing but tear apart the physical and paper markets. And here's how it will happen. So here we have this ridiculous Bloomberg article titled EU to debate radical energy intervention tools as crisis worsens. Ministers to discuss energy market liquidity, gas price caps. Czech government to float new options to curb price spikes. It may as well be called EU to debate ending the law of gravity in the universe. If you think this article sounds a little bit endgame, a little bit too alarmist, well, it does sound that way, which means that our forecasts are getting closer and closer to reality. So here you have this key sentence. European leaders have been bracing for the prospect of supply cuts for months, pledging to cut gas demand and seeking alternative sources of supply. But rationing now looks inevitable, with countries unable to make much of a dent in energy usage. And it continues with the endgame-like tones. Europe is racing to stave off an energy crunch that's threatening to become an economic and even financial crisis too. Nordic authorities moved this weekend to bolster the liquidity of utilities struggling with collateral requirements, saying that there was a risk of a Lehman moment. Collateral requirements, that means margin calls from electricity shorts that power companies use to hedge their electricity positions. They are getting margin called and they need to get bailed out. Here is where we find out what happens when the paper markets and physical markets get ripped apart. The paper markets of any commodity and the physical markets of that same commodity are joined at the hip by a theoretically deliverable paper contract. But when that no longer is deliverable because there is no supply, then the value of the paper contract falls to zero and the value of the physical electricity or coal or gold or silver or whatever it is, that holds all the real value. And therefore, anyone who owns a paper derivative owns nothing. And here you'll see that. Here are these bullet points. These are the plans. And I will go into the impact of every one of these bullet points. To limit the impact of gas prices on power prices, 1, temporarily capping the price of gas used for electricity generation. That means that producers of natural gas will stop producing gas because it is no longer profitable to sell that gas at a price below its production costs. And there will be a serious shortage of gas, even worse than there is now. That's the outcome of bullet point 1. Bullet point 2, putting a price ceiling on gas imported from Russia. That means Russia will stop exporting gas into Europe, which they already have done. They've cut off the Nord Stream pipeline completely, talking about some oil leak, but we all know that they're strangling the continent. So that is completely irrelevant because Russia is no longer giving any gas to Europe. Bullet point 3, temporary exclusion of power reduction from gas from merit order and price setting on the electricity market could also be an option. What this means is that every day or every month or every week or whatever it is, the highest cost power of all power plants in Europe or wherever it's organized, the EU or the Eurozone or whatever the group is, the most expensive power for that day or that week sets the price for the rest of the power plants in the continent. And through doing this, they're all guaranteed profitability because the price is the most expensive of them all. This is a very centralized, unstable system that does not sustain itself in stress periods like this one. And so by saying that they will suspend gas from merit order and they will allow prices to be set by cheaper alternatives, that means anyone more expensive than the cheaper alternative will not produce any power because it will not be profitable to do so. And you'll have even less power being produced. And now here is where we talk about the paper versus physical markets. To increase liquidity on the market, 3 bullet points. An urgent Europe-wide credit line support for market participants faced with very high margin calls. The margin calls we discussed in the previous video are from power companies that have an electricity short position, hedging their forward sales, and now they have margin calls and they cannot meet them, and so they need bailouts from their government owners. And so what's going to happen is that Europe is going to print even more money, and the ECB is going to have to monetize it by buying more bonds, and it's going to increase inflation, which will bring power prices even higher. Second bullet point, capping the limits for margining or automatic price ceiling adjustments. Saying that power plants and companies can no longer hedge themselves is going to mean that they can no longer supply the same amount of electricity, which is going to reduce supply, which is going to push prices even higher. Bullet point 3. Now, here is the point, the crux of it. Temporary suspensions of European power derivatives markets.
I have directed Secretary Connolly to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
What is this? What is this? Where's all the money?
That's as good as money, sir. Those are IOUs.
What is a power derivatives market? It is paper contracts of electricity supplies that companies use to hedge themselves. And so if this market is suspended, that means that the paper is no longer deliverable and the paper is therefore worthless. Futures contracts in electricity become worthless. And where does the value go? It goes into physical electricity that is actually available supply on the market. That is where the value goes. It's going to be the same in every commodity. And what is the difference between gold and silver? Well, we're having an electricity crisis right now. That is only one aspect of the global economy. However, what is a gold crisis? What is a dollar crisis? That is the entire monetary system of the global economy. So you'll see when gold goes up and up and up and up, and the dollar's purchasing power goes down and down and down and down, along with all the fiat currencies that are based on it. And you'll have rising and rising and rising prices. And what governments may do is suspend the gold and silver derivatives markets and set caps on gold and silver futures as the supplies get drained in COMEX and LBMA and emergency supplies get snapped up. Eventually, what you're going to see is price caps on these gold and silver derivatives, which are what the contracts are. And when these markets get suspended, all of the actual value will go into physical gold and silver, just as the gold and silver bugs have been saying for years. This is coming. Exactly when, we don't know, but it is happening now in electricity, and it's going to happen in other commodities, and it's going to rot up the chain of commodities until you get to the money itself. And when it does, the dollar will be dead. Expect them to suspend trading in gold and silver derivatives. Expect the paper markets to be suspended, and expect all value to be concentrated in the physical markets. So get your physical now. You can play with paper, you can play with gold stocks, you can play with futures, you can play with ETFs. For now, for how long, we do not know, but expect it all to go to zero in good time, and not that much of it at that.